Can we just share the screen quickly? Yeah, there we go. All right, so first prize, 12-month Giga policy. Let's go.
Drum roll.
Drum roll. Woohoo! George Dalton. Let me write that down. Don't you worry, Georgie. I will be in contact with you so that we can issue that policy for you, and congratulations. Our second prize is a 100% off Black Friday special for a 12-month terror policy. So let's spin the wheel again. Okay, Anne Mitchell, congratulations. I will be in contact with you, Anne, so that we can get that policy issued. And then lastly, the grand prize, which is a 12-month PETA policy. Let's spin the wheel for that one. Janine, woo! Amazing. Congratulations, everybody. And thank you so much for joining the sessions throughout the month of October. We really do appreciate it. I will be in touch with George, Anne, and Janine to get those policies issued today. We will make sure that we get in contact with you. So thank you so much. Thank you for participating. If you'd like any info on my solution, feel free to take a look at our website or drop me an email. Have a great day, and I'm looking forward to the session. Over to you, Abs.
Thank you so much, Candice. Congratulations to all of our winners. So yes, let us kick off our iTOOsdays for today. Just to begin with, the purpose of this iTOOsdays is really to highlight the importance of fraud, seeing that we have our International Fraud Awareness Week coming up from November the 12th to 18th November 2023. And I will then go on to introduce our speakers for today. So we have two amazing ladies. We have Roxane Ferreira and we have Beverley Erikson. I am going to quickly read through Roxane's bio. So Roxane Ferreira is a certified fraud examiner, and she's employed by the Association of Certified Fraud Examiners South Africa as the head of operations. She's an experienced fraud risk management professional with a passion for ethics. She has worked across various spheres of business, including risk, integrity, business management, learning and development, project management, strategy, with a prominent focus on fraud prevention and ethics. Whilst employed at the Special Investigating Unit, she was responsible for the development and implementation of the organization's fraud prevention and response strategy and plan. She also lectured on strategic management and organizational development at the Tshwane University of Technology on a part-time basis. Roxane holds a PhD in workplace ethics, as well as a master's degree in business administration. And then we have our second speaker for this morning, which is Beverley Erikson. So Bev was previously employed in the underwriting, claims and broking of commercial crime and financial institutions for more than 20 years. For the past 5 years, Bev has been with Merylnn Intelligence Technologies, an AI company focused on human decision automation. Today, Bev will share with us how this technology is being used to introduce digital forensic auditors into the buying process to reduce the risk of fraud. Thank you so much, Roxane. I am going to hand over to you.
Thank you, Ablonia. Good morning, ladies and gentlemen. I just, in the line of being ethical, have to correct Ablonia. I don't have a PhD. It is a master's degree in workplace ethics. But thank you for that promotion. Now, I'm going to talk today about statistics that come from the report to the nations. Every year, the Association of Certified Fraud Examiners do a lot of research, and this research culminates into the report to the nations. And before I'm going to do that, I just want to tell you a little bit more about the ACFE. Next slide, please.
I'm just trying to move the slide. Sorry about that.
So the Association of Certified Fraud Examiners, or the ACFE, is the world's largest anti-fraud organization and premier provider of anti-fraud training and education. Together with more than 90,000 members, the ACFE is working towards reducing business fraud worldwide and inspiring public confidence in the integrity and objectivity within the profession. Globally, there are 195 chapters representing 76 countries. The mission of the ACFE is to reduce the incidence of fraud and white-collar crime and to assist the membership in fraud detection and deterrence. The ACFE has a professional designation, namely the Certified Fraud Examiner, or CFE, and this designation is recognized globally. The South Africa chapter of the ACFE is a recognized South African professional body representing and governing fraud examination professionals in South Africa. We are governed by the National Qualifications Framework Act and the ACFE chapter bylaws. We have regional committees in 5 regions across the country, and we encourage ACFE members or even non-members to join in with their activities. They have 4 events per year, and members get the opportunity to engage with like-minded professionals who are facing the same challenges in the fight against fraud. As Ablonia mentioned, it is International Fraud Awareness Week a little bit later in November, and our regional committees are each presenting an event during this week. They will be hosted in Johannesburg, Cape Town, East London, and Bloemfontein, as well as in Durban, although the Durban event is taking place a bit later in the month. So please have a look on our website for more information and join us in these sessions, which are free. Yeah. The latest report to the nation looked at 2,110 cases from 133 countries, which caused a total loss of $3.6 billion. Of these cases, the majority, which is 36%, were from the United States and Canada. And interestingly enough, the second most cases, namely 23%, were from Sub-Saharan Africa. The total number of cases in Sub-Saharan Africa that we looked at in the study was 429 cases, of which the vast majority, namely 188, were from South Africa. Now, on this slide, what is most concerning is that it is estimated that organizations lose 5% of their revenue to fraud every year. Now, 5% might not sound like a lot, but if you think of the revenue of your own organization, or even if you take your own salary and you just have to give 5% of that away to a fraudster, it becomes quite a substantial amount. Next slide, please. Before we start talking about fraud, let's first just have a look at what fraud is. In South Africa, the legal definition of fraud is a misrepresentation of the truth with the intent to cause prejudice. And this prejudice could be actual prejudice or also potential prejudice. Next slide, please. The main types of fraud are corruption, asset misappropriation, and financial statement fraud. This slide illustrates the fraud tree, which includes the different types of fraud that fall under the main types of occupational fraud. Now, in South Africa, the terms fraud and corruption are often used interchangeably, but corruption is actually a subset of fraud. What is important to note regarding corruption, that for corruption to occur, there always need to be more than one perpetrator. You can see this when you look at the subcategories of corruption, namely conflicts of interest, bribery, illegal gratuities, etc. Asset misappropriation is basically theft, where there is an element of deceit involved. And this can be misappropriation of cash or any other item on the inventory of the company. The third main category is financial statement fraud, which takes place in the accounting space, and this is better known as cooking the books. Next slide, please. So why does fraud occur? This could be explained through the fraud triangle, which you can see on this slide. And this is a theory that was developed by Donald Cressy in the 1950s, but it is still valid up until today. According to this model, there must be three conditions present for fraud to occur. Firstly, there must be a pressure to commit fraud. Usually it is need or greed, where there is a financial motivation to obtain money. For instance, my child can be sick and I need money urgently for an operation. Or it can be greed, living the high life, going on overseas holidays, driving smart cars, etc. The pressure can also be emotional, for instance, by a spouse or even a child who places pressure on a person for a lifestyle that they cannot afford. The second condition is rationalization. The person must be able to justify why it isn't so bad to commit the fraud. I can tell myself that the company isn't paying me enough. They make so much profit, they won't even miss it. Or it will only be this one time. And from experience, we know that fraud, if a fraudster commits fraud once and gets away with it, the fraud is often repeated. The last condition is opportunity. And this is the most important condition. A person can really have a lot of pressure to commit fraud and can be able to motivate why it should happen. But if there is no opportunity, the fraud would not take place. Opportunity can be removed when organizations institute preventative measures, such as internal controls. Next slide, please. So what can an organization do to prevent fraud from occurring? Background checks are an important tool in the fight against fraud, as they can prevent organizations from hiring individuals with a history of misconduct. However, as you can see on this slide, 43% of victim organizations did not even run a background check on the perpetrator before hiring. Furthermore, of the background checks that were run on the perpetrator, 21% revealed previous red flags. So that means that individuals were hired even though they had known instances of misconduct or other concerns. Next slide, please. The two most common forms of background checks run by the organization were employment history in 45% of the cases and criminal checks in 40% of the cases. As you can see there, other background checks were reference checks, education verification, credit checks, and drug screening. Now, the type of background checks that an organization does on their prospective and current employees might differ depending on the type of organization and also the position of the person. For instance, if a person is going to work with money or in the organization's finance department or with procurement, it would be really important to do a full background check regarding the person's financial position. In South Africa, in government departments, vetting is done. State Security Agency, Defense Intelligence, and SAPS are legally mandated to do the vetting, and the focus is on security competence. It is recommended that all entities do a form of screenings or lifestyle audits before a person joins the organization, and also continuously during their employment. So the focus of lifestyle audits is mainly on finances and to determine whether the person's expenses are in relation to their income. This should be an important focus of a screening process, but other factors should also be included. For instance, verifying the candidate's qualifications, a criminal record check, social media check, etc. Screenings are an entity's first line of defense, and it is always better to keep the perpetrators out of the entities from the outset, rather than to later try to get rid of them. An entity can really sustain serious reputational or financial damage. Let's say, for instance, they appoint a CFO with a criminal record for fraud. Also, on the board of directors, a director who has been declared insolvent in the past may not be appointed, but is this even verified before a director is appointed? Most companies take a qualification that is presented to them by an applicant as the truth, but what if it is forged? Not only will you be appointing a person who has committed a crime, but this person may not be able to perform the job for which they have been appointed. In the current economic climate, where the unemployment rate is around 33%, it has actually become common for applicants to enhance their CVs in order to stand a better job. So if this CV isn't verified, it could result in the appointment of an employee who is incompetent to do the job. Next slide, please. On this slide, we can see what the main types of red flags are that were displayed by perpetrators. And it's very clear that the largest number of red flags are concerning the lifestyle of the perpetrator. Living beyond one's means is the #1 red flag, and I think it is cut off, but it was displayed in 39% of the cases. The second most prevalent red flag also has to do with the person's financial position, and it is financial difficulties. In the third place is an unusually close association with a vendor or a customer. Next slide, please. I just first want to give a bit of background. Only 6% of perpetrators in our study had a prior fraud-related conviction, which is consistent with the findings of previous studies that have been done in previous years. It should, however, be noted that 42% of the cases in the study were not reported to law enforcement agencies, and therefore it is very likely that the true number of repeat offenders is higher. So if you look at this slide, you can see that 83% of fraudsters in our study has no prior record of having been punished or terminated by an employer for fraud-related conduct. But similar to the criminal conviction data that I've just mentioned, it is really possible that this overstates the true number of first-time offenders. We also found that only 9% of fraudsters in our study were actually previously punished by the victim organization. So this indicates that a considerable number of fraudsters may have no employment disciplinary record for fraud, even after they've been caught. Next slide, please. Once the organization has identified fraud and determined who was responsible, it must be decided, firstly, if they are going to punish the perpetrator, and if so, how. So termination has been found to be the most common punishment faced by the perpetrators in 61% of the cases. In 11% of the cases, the perpetrator was permitted or actually required to resign in lieu of termination. 10% signed settlement agreements with the victim organization. And in 12% of the cases, the perpetrator has already left the organization before the fraud has been detected. Next slide, please. Even in organizations with anti-fraud programs, fraud can and does happen. So to better understand the factors that can lead to occupational fraud, the participants in this survey were asked to identify the main internal control weaknesses that allowed the fraud cases to occur. The most common factor in our study was a lack of internal controls. As you can see there, 29% of victim organizations did not have adequate controls in place to prevent the fraud from occurring. Another 20% of cases involved an override of existing controls. This means that the victim organization had mechanisms in place to protect them against fraud, but the perpetrator was able to circumvent those controls. Together, this shows us that almost half, well, 49% of the frauds in our study likely could have been prevented with a stronger system of anti-fraud controls. Next slide, please. On this slide, we can see what the most common anti-fraud controls in sub-Saharan Africa are. The number one control is a code of conduct, but it doesn't help to have a code if it isn't implemented. In the second place, there were two controls with the same percentage, namely external audit of financial statements and having an internal audit department. And then in the third place is management certification of financial statements. It can be helpful for organizations to benchmark their own anti-fraud controls against those of other organizations. Next slide, please. The presence of anti-fraud controls is associated with lower fraud losses and quicker fraud detection. It has also been found that in 81% of victim organizations, they modified their anti-fraud controls after the fraud has been discovered. 75% of these organizations increased their management review procedures, and 64% increased the use of proactive data monitoring or analysis. Next slide, please. Here on this slide, we can see how the presence of internal controls in an organization relates with the duration of the fraud before the fraud has been detected. We can see that the median duration, where there are no controls in place, it's the light blue lines, is approximately 18 months. Whereas in the organizations who have controls in place, it's approximately 12 months. That is the darker bars. This, of course, has a huge impact on the financial loss suffered by the organization. Next slide, please. The majority of frauds in our study as you can see there, the bottom two, 58%, were committed by 2 or more perpetrators working in collusion. You can see on this slide that the median losses tend to rise when more than one person conspires to commit the fraud. And the reason for this is that in collusive schemes, the multiple perpetrators are working together, so they may be able to circumvent controls that are based on separated duties. Next slide, please. Here you can see that this is the recovery of losses, and 52% of victim organizations did not recover any losses. Interestingly enough, these statistics correlates exactly with the statistics for Sub-Saharan Africa. And it should also be noted, unfortunately, it is cut off, but only 11% of victim organizations in our region recovered all their losses. Thank you.
All right, thank you so much, Roxane, for those interesting yet scary statistics. I think this is really evidence enough to show that commercial crime is really a growing risk in our society and globally as well. So thank you so much for the stats that you shared to us. I just have two questions for you. And the first one is that, you spoke a lot about background screenings as a preventative measure. But then your stats also showed that a lot of the perpetrators where background checks were conducted, the information wasn't either recorded, there was no disciplinary action taken. So when employers are looking to hire a person and during the screening process, how can they pick this up if there's no record of it?
I always tell organizations that a thorough background check always have to include a truth veracity test. So this is a lie detector test, and I would recommend one that can be done over the telephone. That is to save time and cost. And this lie detector test must be done right at the end of such a screening. And it must be done by a really good and well-trained operator. So they should be able to pick up if a person was involved in fraudulent actions previously, even if it has gone undetected. So the questions must be structured in such a way that, that it also includes fraud that has never been discovered.
All right, thank you. And the second question is, how can companies that have experienced fraud actually recover the losses?
As I explained in the beginning, fraud is a crime, so it needs to be reported and investigated by the law enforcement agencies. And then recovery can take place through civil procedure proceedings, or also by a court order at the end of a criminal hearing. Public entities can implement treasury regulation, I think it is 12.7. But as I discussed, only 11% of losses are fully recovered. So therefore, it is very important to have the preventative measures in place.
All right. Thank you so much, Roxane. I really appreciate your time. We're going to move over to Bev from Merylnn, and she is going to talk about fraud risk management and collusion fraud and how that can be managed. Thank you so much, Bev.
Thanks, Abs. If you don't mind just moving on to the slides, and you can move along to the next one. Thank you. So as Ab said, I'm from an AI company called Merylnn. I will take you through how we are helping organizations manage the risk of collusion and corruption using the technology. But to understand the solution, I think it's important for us to just cover, how these frauds actually occur and how these people are getting away with it. So just some of the headlines, and as those of you who have been involved in this aspects of business for some years will know that very few of these frauds actually make headlines. I think these two were just, quite big. And so in the past couple of months, we've seen how a single individual has been able to defraud more than R500 million from a company called Medtronics. This happened over a period of 12 years. So where Roxane was quoting an average of 18 months, she managed to get away with it for 12 years. And in the Clicks example, the finance clerk there managed to get away with it for, it was around 12 months. And in those 12 months, he managed to steal an impressive R4 million. And that was through, we're going to look at all the different ways that they do manage to steal money. But his was specifically in changing purchase orders and the details on the purchase orders. And obviously they changed the details on the payments in terms of the vendors. So thanks, Abs, if you can move on. So fraud occur, and there are multiple, again, two of the most common happen undetected for so many years. The auditing firms miss this. So the thing for me is that if you had to ask an auditing firm if their scope was to find fraud, they will actually tell you not. So when they come in their once a year, these are external auditors that we're discussing, their once a year audit, they have a scope. They sample, obviously, just a small amount of the purchases that have occurred. They're there, they will tell you to tie up numbers to make sure that invoices match purchase orders, things like that, to make sure that the numbers all tie up, and that their primary scope is not actually to detect fraud. So while your customers might be under the impression that this audit is going to pick up fraud, they will actually disclaim that, and I've got multiple articles that we can share with you around this. They also often send in, quite junior auditors, and these fraudsters are really smart. They know exactly how to hide, how to create fictitious documentation to present to the auditors. So, there's multiple reasons why it does go undetected. Now, so what we're relying on as businesses is our auditors. And then, quite a few companies have obviously created initiatives around whistleblowing. Now, I think you only have had to read the headlines recently to see what a risk that is in this country. And I think that what you would find is if you had to ask people if they would, blow the whistle and highlight a fraud in their organization, chances are people are going to say the risk associated with that for myself and my family are just too high. So right now, our government is trying to create laws around this to protect whistleblowers, but it really isn't, a reliable source of finding fraud at the moment. So we're going to look at how organizations can actually guard against this using technology. If you don't mind moving along to the next slide. It's just important for us to unpack and understand the procurement process as such. So purchasing is obviously one of the areas within an organization where it is that you are most vulnerable to, money being extorted out of your business. In the purchasing process, there's multiple steps. Generally, organizations have a list of vendors. These have been approved, created through a legitimate process. And the fraudsters, what they do is they look at these vendors, they see which ones haven't been used in a while. They often change the vendor details, or they might make a very similar vendor, by just changing the name of the vendor ever so slightly, putting a PTY instead of an LTD or whatever it is at the end of the name. and then of course changing the bank account details. They all look at things, price lists. So within these organizations, there are approved price lists for items, and they might change that by even just, depending on the volumes that you're buying, by a couple of rands, which would obviously result in massive, amounts if the volumes are quite high. So within the process, you create what is called a purchase requisition, which is, I need 12 computers for my department. That's approved by a manager. It goes through and you create what is called a purchase order, which is the approval of that actual requisition. And then you create a vendor invoice. This is at the accounts department, the vendor invoice is created. And this is where, a lot of the fraud occurs, because obviously the fraudsters are sitting in that department, in the accounting department, changing, the details either on the vendor invoice in terms of the payee, and splitting it, and sometimes, making multiple changes. What companies have introduced is approval processes to try and prevent, and pick up these changes to the invoicing process. And of course, the problem comes in where the approvers themselves are the fraudsters. So, Abs, if you can move on to the next slide. What you're seeing in this slide is the accounts payable leg of that whole procurement process. And the control that we've introduced is that we've got approvers, and Roxane mentioned that, the numbers associated with, a single person working in Collusion versus 2 versus 3. And I think if my maths was right, when there's 3 or more people involved in the syndicate or in the collusion and corruption, the numbers are around, the average or the median number is around 4 million rand that is stolen, which is quite substantial for any organization to lose. So in this process, in terms of the systems, how the systems are set up is you would create, and at this stage the fraudsters are having their hands together, because it's really the last step in the process, and within minutes, the money is going to flow out of the organization. So they create the invoice, they've put the new payment details into this. The system then has controls built in, and these are things like, this is a high value item, so therefore it needs to be approved, or the value of the invoice is such that it needs to go to more than 1 or 2 approvers, however many are in the queue. So again, as I said, if those are the people, if they're involved in the fraud, what they're going to do is approve it, and the money will flow out of the organization. Now, the second methodology that these fraudsters employ is they very quickly find out what the company thresholds are in terms of what requires approval, and they keep the payments below that threshold so that no approval is required. And then what they do is they process multiple smaller invoices, and there is just no approval process. So those are probably 2 of the most common ways in which the fraud occurs and the money flows out of the organization. So Abs, if we can move to the next one. What we have developed at Merylnn is a technology that we call our digital twin technology. And what it allows you to do is to digitally replicate the decision or the opinion of an expert, any experts. And in this example, obviously, we're talking about forensic experts. Now, earlier I mentioned that the auditors are going to tell you that it's not their job, but within auditing firms, there is a forensic department. And those that are called in post the fraud occurring to investigate what happened in the last 12 years in the Medtronic example, and to try and these forensic auditors, as well as the forensic investigators, are extremely well versed in how these frauds occur. And I think they've stopped the video to help with this up. And these guys know what they're looking for. They know exactly how these fraudsters perpetrate these crimes. So the digital twins of these forensic experts, what they're looking for. And because we've built a digital twin versus a human expert, we're able to deploy these teams of an organization system to provide an independent monitoring capability. So you don't have your own internal people looking at this. You've got this independent review panel looking at it. And they're going to flag potential fraud. And then what we do in terms of the system itself, gateway, until it has been approved by a very senior person in the organization. Now, it's totally possible that that very senior person is also involved. And at that point, what you have created at the very least is an audit trail to, verify that this was flagged and that this person overrode it regardless of the flagging. So Abs, if we can move to the next slide, just to illustrate for you what happens is, alongside and in parallel to the workflow, the accounts payable workflow that exists, and unbeknownst to the people working within your finance department, this review panel has been created with forensic experts outside of the organization, reviews every single invoice. So again, as I said, because it is digital, there is no capacity constraints around how many of these invoices they can look at. So regardless of the size, whether we're buying 3 pencils or we are buying 300 computers, the review panel can look at every single one of these purchase orders and purchase requisitions and make a judgment on it. As I said, they will raise a flag in terms of the system. This is an alert sent to a very senior management for them to investigate, this particular invoice, and then at that point decide to either approve it or decline it. And obviously, if it's approved, then the payment is made. If it's declined, the payment is blocked. So the benefit, I guess, of this is that before the money flows out of the organization, it is detected and can be investigated. So, it's so much better than coming in, obviously, post and trying to audit and find the money and recover the money, as, Roxane was discussing, when very little is normally available to be recovered, because so many of these frauds are around lifestyle. So the money is spent, it's gone, it's nowhere to be found, and there's no recovery to be made. So, Abs, if we can move on to the next slide. Just to be clear, the technology that we've created allows us to replicate the fraud experts. So our solution is totally reliant on working with organizations with forensic experts, and it is up to the customer to identify who they want on their panel of experts, for us then to go and build the digital twins alongside those organizations. And, this is not us creating a fraud solution. We've got a technology that enables a fraud solution. For some of the bigger ones there, but the independents are equally as impressive in terms of their understanding and knowledge of the space. And, we've built digital twins with multiple organizations at this point in time. Thanks, Abs. You can move on. So in terms of our customers, what are we looking at here? We're looking at enhanced fraud risk management and reducing, obviously, internal fraud and collusion, because your internal the twins that we've created in terms of that fraud review panel. So there's no ways they can influence a decision or influence, that flag that is raised. We've also eliminated the risk of this below threshold that they were making use of, in terms of keeping, below a certain value and, obviously processing multiple invoices below that value. And then the proactive risk management versus the reactive risk management and traditional that we have currently. If you go to the next one. Then yeah, we can just skip over this one. Thanks, Abs. We'll come back to that. We've got multiple materials available for you to share with your customers to relook at how all of this happens and what's available and think about it. Otherwise, feel free to reach out to us, and thank you for your time this morning.
All right. Thank you so much, Bev, for sharing this information and really highlighting the risk of collusion fraud. And a solution that can be implemented with regards to this. So I have a question for you. So what would the target market be for a solution like this?
So as as I explained, the collusion element comes in when we've delegated authorities. So I would say medium to large size organizations, where you've delegated authority to try and manage volumes, because that's where the risk lies. If obviously you're the owner of a business and you're able to approve every single payment, then this risk probably isn't there within your business. As delegated authority to people to enable processes to be run more efficiently, the risk of corruption is there. Now, again, it's industry agnostic, meaning that any business who's buying and procuring goods and services, which is almost every business out there, has this risk, provided there's the delegation of authority. And I think it would just be absolutely fantastic if we could have this independent external oversight, especially in our government institutions. I mean, it's our money as the taxpayer that is being spent. And why are we not able to insist that we have, that type of independent verification happening for our government institutions? So long answer to a short question, sorry.
Thank you. And how much does this actually cost?
Okay, so great question. And again, it's kind of one of those, how long is a piece of string? So we work with the experts. They will determine what the cost is. Obviously, because this is happening on a volume basis, they look at how many invoices or purchase orders they're screening. They look at how many of their experts are looking at it. And they generally price it per invoice on a sliding scale based on volume.
All right. Thank you so much, Bev, for that. Thank you for your comments. And just to quickly sum everything up that we have heard, from just the mitigation point of view and what clients can actually do. The first thing is for them to perform risk assessment investigations on an ongoing basis, in order to quickly detect and mitigate fraud. And also, secondly, to supplement technology with other tools that will help with sustainable government structures and just really fostering a culture of fraud awareness. Secondly, is to offer fraud awareness training, by introducing anonymous whistleblowing hotlines, fostering a culture of honesty and integrity. And then fourthly, to conduct criminal and background checks on all employees. As we have seen from the stats presented by Roxane, a lot of the perpetrators who have their criminal background checks done and have actually been a perpetrator before, they're most likely to actually commit the crime again. And then also to tighten financial controls, internally as well, to have segregation of duties, to have dual authorization. There's always important to have a second, a third eye to all of transactions. And lastly, but most importantly, to purchase commercial crime cover from iTOO as your product experts. And that is it from us this morning. Thank you so much for tuning in. So we have some questions that we will actually answer. I think one is addressed to Roxane. from Chris. Is it from Chris?
So the question is from Karen Pretorius, one of our brokers, saying that it would be interesting to see if background checks are still easy to do. Would copy have some sort of impact on these screening checks, Roxane?
Copy definitely has an impact, but it doesn't eliminate the opportunity to do background screenings. Consent is of utmost importance. So if a position is advertised, right, from the advertisement, the applicant must be informed that a background check is going to be done. It must be included in the application form where the consent is also given. And then also it must be included in the employee contracts, as well as companies must have a policy regulating screenings. Obviously, a lot of people have resistance against background checks being performed on them, and it is usually because of uncertainty, and they don't know what is going to happen. And let's say, for instance, I'm under debt review. Am I going to be fired, or am I not going to get the job? So, for instance, debt review is not necessarily negative in all cases. If I place myself under debt review, it shows that I realize that I am in a difficult situation, and I actually attempted from my side to do something to rectify the situation. So just to sum up, consent, that is the bottom line.
Great, thank you, Roxane. And then we have a nice claim scenario given to us by Chris Merylnn, saying a client of ours is a transporter at one of the depots warehousing services are in place. Incident occurred whereby third-party stock was stolen. No forcible and violent entry occurred. Theft was related to employees and possible security company having been involved. Commercial policy would not respond, neither GIT stock throughput policy. Only other option is a commercial crime policy. However, feedback we have obtained from the market is the commercial crime is not available for transport and logistics sector due to the associated risk. Abs, is that true?
Thanks for the question, Chris. So that is actually not true. We do consider logistics and warehousing as very high risk for us, but we do have our minimum deductibles, our maximum limits, and other underwriting considerations. So depending on the information submitted to us, the proposal form, the financial statements, we're able to evaluate the risk and see if we can assist. But we do have a couple of warehouse and logistic companies on our books. So we do actually offer cover on the comp crime side.
Thanks, Ablonia. And then two more short questions, and I'm going to kick them to Bev from Melita, our very own Melita Sterling. Bev, does the invoice bill need to be in any particular format for your tech to work? Bev, that's a tequila for you, and we couldn't end the session without passing out tequila. Please unmute yourself.
Most spoken words on video conferences. You are on. Melissa, thank you for that. It does not need to be in a particular format. What our experts are looking for in the data that needs to be fed into our digital twins. Some of it is data that's present on the invoice. Other is data around things like IP addresses, vendor details, timing around changes. So there's multiple things that these experts look at. And provided you are using a system to capture that information and the digital twin will be able to analyze it, read in real time, and respond in real time. So it's really just a case of the required data for the model to work being available in an electronic format.
Great, thank you, Bev. And then the last question from Francois Janssen van Vieren. Does this not influence the turnaround time of legitimate invoice approval?
Also a great question, and I probably should have highlighted that the digital panel operates in real time. So it's a real-time review, a real-time response, And the only time there's going to be a delay is if they have picked up something, it gets sent then to a human to re-look at. But I think that delay would probably have been worthwhile. There obviously are times when the panel might pick up something and for legitimate reasons, something has been pushed through. But those would probably be few and far between. So it's an absolute real-time solution. It is not adding a delay. And it is, in fact, as I said, to you, giving you the benefit of being able to look at every single one, not just the high-risk ones that are currently being looked at.
Thank you, Bev. Thank you, Roxane. Apollonia, back to you.
All right. Thank you so much, ladies, for joining us this morning. Thank you to everybody who tuned in, our faithful brokers. And it's a wrap. It's a wrap for today. Have a good day further and a good week further. Bye.
Bye.